Good evening and welcome back to our tax coverage of the budget at CNBC Africa. It's the last panel of our special broadcast of the 2019 National Budget. I'm Chris Bishop. We focus to tax savings, but a little bit of breaking financial news this afternoon from further afield. Zimbabwe's Reserve Bank says it's going to open up an interbank foreign currency trading market on Friday. The Reserve Bank will sell this forex to the banks at a margin of 2.5%. The move not only cements the so-called bond notes as a currency in Zimbabwe, it also allows them to be traded with the US dollars. Now, this could see the end of the government's insistence that bond notes and dollars be traded one-to-one. The shortage of hard currency is acute in Zimbabwe. It's estimated that 3.5 million bank account holders share a mere $205 million between them. So we get off Zimbabwe now and straight into tax, and thank you very much for coming. Samke Mhlongo, the founder and CEO of TNC Wealth Partners, Bernard Mofokeng, Director in Tax RM Partners, and Zweli Mabhoza, founder and director of Priority Tax Solutions. And also, hopefully, we'll be going via Skype to Anthony Ginsberg, managing director of GinsGlobal Index funds. Okay, ladies and gentlemen, let's kick off. I mean, what was your, from a tax point of view, just give me a quick, short assessment of what you saw today.
I thought we were going to see something on the tax-free savings. I mean, we'd had an increase in the annual allowance that is given to individuals since it was introduced, and there was no mention of that this year. So I'm quite happy, though, that we didn't see rising tax rates in the tax bracket. So I think that's a little bit of a necessary and needed reprieve on the consumer whose belts are already tightened beyond belief thanks to the VAT increase last year, fuel price levies, which we did get again this year, but not as high as last year. So that's what I took from it.
And also, I want to point out, everybody under 65 is getting a whole 153 Rand a year rebate, which is not so bad. But Bernard, what do you think? What was your quick assessment of what we saw today?
I think there was no major surprises today. And I think it was expected that they're going to focus a little bit on SACS in terms of implementing the new report, and also to empower it a little bit so that it can gain more traction and collect more revenue.
Okay, Zweli, and what did you see from it?
Look, I think the point that Bernard is making is crucial, because if you look at what is happening now, I don't think that the fiscus is collecting enough in relation to the GDP. They need to make sure that they've got sufficient skills, that people are skilled enough to be able to deal with complex transactions so that they can be able to collect their fair share. And I think the focus, to some extent, they did mention that they want to strengthen SARS, which I think is good. But because now the legislation is already complex. If the legislation is complex, you need people who can actually be able to deal with that.
And talking about SARS, I mean, the re-establishment of this large business unit, they were saying, oh, it was so successful in the past. Makes you, well, it was abolished by the Tom Moyane, the previous director. So do you think, what difference is it going to make to business people out there?
Well, I think, you know, the focus, as you did mention, Zweli, is around, you know, increased collection, because at the moment with the deficit, we're needing to borrow in the bond markets. And, you know, we're staring down the barrel of a downgrade gun on the 29th of March when Moody's actually makes their pronouncement. And I always tell people that we actually junk light. We are not even junk status because we're still on the Citibank World Bond Index. Now, Investec estimates that if we do get removed from the World Bond Index as a result of the downgrade, we could see about 8 to 10 billion US dollars leaving the country. You know, only then would we feel what junk really is. Someone said on social media that, oh, it would just be worsening an already bad situation. I said, no, darling, it would be a completely new situation. You have not felt it because we haven't been down, we haven't been junk status rated by all three agencies since before 1994. So we actually don't know what it feels like.
Well, actually, just talking about international reaction to this budget, we should take a quick look at the Rand here. We've been tracking it for most of the day. And I'll just have the latest, well, the live figure here. And I'd like to know what your views are on it. I think they're going to come with it in a second. But just meanwhile, while we're waiting, this fuel tax, we mentioned...
Maybe for just
sorry,
the point that
just respond to that, yes.
The point that Samke mentioned is very important. Because now, the reason why you've got the large business unit and you've got all these other units is because the big organizations, that's where you collect a bigger chunk of your tax. but you need to establish a relationship. What is happening now, without that large business unit working properly, now if you are actually dealing with a big client, the client, they don't know who to talk to. And that is the worst relationship that you can have. Otherwise, they may as well go back and call themselves receiver of revenue because they are there to receive. There's no service. So the large business center is there to make sure that there is a proper service for big organizations.
And there's the dollar rand on the screen there. We look down to 13.96. What do you, just quick reaction to that? I mean, are you surprised, or do you think that we got off lightly there?
I think the market had actually priced it in. I mean, you saw a little bit of a dip over during the week in the build-up to the budget speech. So I think it was largely priced in, and it's actually quite good relative to where it was early in the week, sort of above the 14 range. So that's my opinion.
Okay, we're going to Anthony Ginsberg now. He's going to come into the conversation via Skype. Anthony, if you can hear me. We mentioned Moody's just now in the studio before you came on. The March decision about the economy. You're of the view that maybe the South African economy is clinging onto Moody's for grim death. Is that correct?
Well, yes, unfortunately, they're the only global rating that has continued to avoid junk status for South Africa. I'm hopeful that the budget will be viewed positively. I think the only real negative was the reduction on the economic growth levels from 1.7% GDP down to 1.5. The announcements from the minister on the SOEs and the ESCOM numbers actually, I think, will be positively received because Moody's are happy that we're not taking on additional debt. I mean, the 60-odd billion that's going to be taken over 3 years on the ESCOM payments, at least it's not adding to the government debt as such. It's coming through the wage bill. And I actually think one other quick point that Moody's will be favorably disposed towards is that we're giving early retirement to public sector workers. So that will also save on the trim the fat from the wage bill. So hopefully there are some positives to take away.
I'll come back to the studio there. We were talking about this before the broadcast, Barnard, and you were saying that you don't think it's going to work, this early retirement for like 30,000 people. I mean, that's the size of a small town.
It might work, but I think the government needs to be consistent with it and stick to it. Otherwise, if they don't stick to it, then it's not going to work at all. It will be just a way of waste of time.
Do you think it's enough, though? I mean, something like that? I mean, they're saying something like 126,000 people between 55 and 59 working in the civil service. Is it going to be enough to take 30,000 out?
I'm not sure how it's going to be effective, but at least they're starting with the initiative, and that's the point to start to reduce the wage bill. So they must start somewhere, and this is a positive side to start it.
Chris, I think the biggest challenge on that is, I know that some of the parastatals have tried this before, in particular in the 90s, late 90s, where you would find that they say that people can voluntarily leave, and then you lose the people that you need, people who've got skills. And then you have people that are remaining behind, are the people who do not have sufficient training, people that you would like to retrench under normal circumstances. So it is very, very important to say, how is this going to be managed? How do you make sure that you don't lose the skills that you need? Because the last thing you want is for people to leave, come back as subcontractors because you save nothing under those circumstances. In particular, they come back as subcontractors, they charge more than what they were charging.
On contract.
Yeah, because they don't have guarantee of working in the long run, etc., etc. And you find that there's no transfer of skills. It's just a gravy train.
So I'm going to ask you this question as well. We're talking about the ESCOM part of where our tax dollars are going. I know you used to work for ESCOM back in the day, years ago, but 69 billion over 3 years. Now that's a lot easier than the debt swap that was talked about, 100 billion, which would have been, what, 8.5% of GDP. Do you think, I mean, Tito Mboweni himself says it's like pouring water into a sieve. And one of my colleagues said it's like putting Band-Aid on a gushing artery, which is a bit florid for me, but I don't know.
Look, I do not know, because the numbers that were thrown, we're talking about 429 billion, the debt that ESCOM has. And I don't know what is that doing now to the confidence that they have with their lenders. Now, if you're talking about 23 billion a year, is it going to make any particular difference? I think we need to get to the bottom of the problem. Why is ESCOM in this situation? They've just built a new power station, big new power stations. After building those 2 new big power stations, what we should be expecting is that they should be generating revenue to service the debts now. Like any other investment, if you go and you raise funding, you buy an asset, the asset should generate sufficient income to be able to deal with this. Yes, there are things that they mention about people who are not paying. Deal with those people that are not paying. Don't get the whole country down. You must not sink the whole country. Those people, they must pay, and the government has to deal with that.
Well, I'll say, Bana, the only thing that gave me confidence today is Tito Mboweni said that Eskom's got debts, they can pay them, not us.
Yeah.
But from a tax point of view, the thing that worries me is that if this continues, we're all going to end up paying more tax next year, the year after that. What do you think?
It has already started already. There's no adjustment to the tax brackets at the moment. Government is afraid to increase fuel levies. They just increase the minimal. And also there's other departments as well that are in debt. The RAF has got a deficit over 200 billion. Also they're giving to TENEL, they're giving a guarantee. SAA also got government guarantee. So it spirals out of control if it's not controlled.
And just Samke quickly, and then we'll go back to Anthony Ginsberg on Skype. But
yeah, but I think it was the first time in a long time where we heard like a firm stance from Finance Minister around the fact that government is no longer willing to just freely hand out guarantees anymore. And also even with the Eskom assistance package, he said that it is subject to them appointing a credible restructuring officer. So it's about fixing the problem and not just throwing money into this hole. So I think that gave me a little bit of more comfort to say they're trying to put a stop into the situation where it's just an escalating guarantee bill that we need to foot as the taxpayers.
And if we go back to Anthony Ginsberg on Skype, Anthony, we just had an expression there, throwing more money into a hole, you know what we're talking about. And basically this Eskom story and all the other things that have been, our tax money has been allocated to, do you think it's enough to convince foreign investors that the country may not be there, but it's on the right track?
I'm hoping Moody's will give us the benefit of the doubt. I think foreign investors will be disappointed, frankly, about the economic growth levels compared to most emerging markets. South Africa is growing at 1/3, 1/4 of the rate of a number of other emerging markets who are in the 4%, 5% growth rates. The other concern foreigners may be looking at is that our deficit numbers and our debt to GDP continue to grow. We're now hitting 60% debt to GDP, which is actually double where it was back in 2008, 2009. So that's quite worrying. And ultimately, if there's one overarching disappointing theme that foreigners may leave tonight with, is there's no real bold plan in terms of new strategy to really boost economic growth. We've got to get economic growth back to levels of 4-5% with the growing population in South Africa. It's a young population, and I think foreign investors want to come and invest in the country. They're looking often at incentives or some attractive policies. The fact that the corporate tax rate wasn't pushed up is a positive, but at the same time, we're competing with other countries that have significantly higher growth. So it's hard for South Africa to compete when you're showing 1.5%, a downgrade essentially on the GDP growth this coming year from 1.7. So that is a disappointment, unfortunately.
Well, thank you very much there, Anthony Ginsberg on Skype. Quick go round, Samke, what do you think?
I don't know. I'm usually, one side or the other. I really don't know how much longer Moody's can give us the benefit of the doubt for. So I actually don't know. I don't have a position.
I think we've got a great plan. I think the problem is implementation. If they can implement all the policies, even if they can implement laws like the PFMA, then everything will work out. I think we'll be on the right track. But the problem for us is implementation of all our policies, our plans. They are not implemented that they should be.
Quick response, Zweli?
Yeah, I agree with, the problem that we have is that you would have the Minister of Finance. He comes and he says this is the direction that the country is going to take. And then the other ministers, they go back, they do something else. It is clear that as a country we are struggling. But I'm not sure if everybody understands that. Because what then happens is that this is just a budget. A budget is more like, sort of like a wish list to say, this is how you should spend your money. But the reality is people, they spend money differently. And I think that even the rating agencies now, they are beginning to understand that, unfortunately, it's not everything that we say that gets implemented. People, they say you need to tighten your belts, and then the next thing you find people buying expensive cars.
Well, the good thing is, talking about tightening belts, at least the SOEs managers, they're not going to get a pay rise this year, which I don't think will be very popular among voters with an election coming in May. But one other thing I want to talk about before we close is carbon tax, which I thought was just an interesting little, it's coming through the petrol thing, I know, but do you think it's going to be a major thing, this?
I don't have an opinion on that.
Okay.
No, I don't think it's going to be a major thing because they're just complying with the Paris Accord that government signed into, so they just have to do it.
Yeah, sure.
Again, it goes back to organizations such as Eskom, which is one of the biggest emitters. Now you've got Eskom that is looking for money. Now, if they have to go and spend part of that money to pay for carbon tax, now they're probably going to be coming back to you and me through the government to say, give me more money so that I can pay you back.
So, on the usual suspects, the sin tax, I see that 12 cents extra on beer, around 14 on cigarettes and 22 cents on wine. And this sugar tax is still going ahead. We all expected that. But we talked about the petrol earlier, about the petrol tax, 29 cents not being too bad. But I think, I always think at this particular time, a lot of companies are screaming, you know, I mean, companies that move things around, they must be like, have their head in their hands tonight thinking another hike after all of this. What do you think?
Yeah, and the thing is, though, it doesn't just impact one industry. You know, fuel price levy and the increase in the cost of fuel impacts everyone because it's embedded in the cost of goods that we consume. So you do find that when you consistently raise that, then you do have inflation ticking up, which has been quite kind to us last year, you know, averaging below sort of 5%, you know, hovering about 4.6 levels. So, but it was coming off a higher base thanks to the drought that we had 2 years ago. So government is consistently squeezing from the sin areas and from the fuel levy, and I don't know how much longer we can sort of bear it because it's not consumer push inflation that you're seeing, it's cost push, and we're struggling.
And the government's still got to borrow something like 243 billion rand to keep the things going this year. Do you think we might be facing more tax hikes next year?
We might, because this said the hikes that were introduced were small. This is one of those years where the tax hikes, tax adjustments are very few. Look at the tax levies. They're all less than I thought. For example, the RFF levy was raised by only 5 cents. It should have been more considering that the deficit to RFS is over 200 billion. But I think that the minister was considering the hikes that happened last year and the incidents that happened in their country relating to the increases. So I think it was a little bit considerate this year that he shouldn't take it high too much.
There won't be a need to increase taxes if they focus on closing leakages. We've seen what has happened with most of the commissions, whether you're talking about the Zolo Commission. If you think about it, if you are supposed to pay 100 rand, you end up paying 5,000 because in the value chain, you've got all these other people that must also be funded because they have to take bribes, and then you have Bosasa still has to be profitable. If they close that tap, I think that it won't be necessary to increase taxes because that will help. Once you close that tap, it will improve with collections because there's also an attitude from people to say, you know what, if I don't file my tax return, who cares? Because in any case, there's an abuse of money. And then you've got all these structured deals that people put together. And again, that is passive protest from people who are really fed up from feeding this beast called corruption. So once you deal with that, there's going to be some element of compliance, and you also make sure that you've got proper skills at SARS to deal with all these complex transactions. Then it won't be necessary for them to increase taxes. They'll just increase the base and make sure that everybody's in the net.
Thank you very much, Zweli. I'm afraid that's all we've got time for on this budget coverage 2019 from CNBC Africa. Many thanks to my panelists, Anthony Ginsberg on Skype there, MD of GinsGlobal Index, Samke Mhlongo, founder and CEO of TNC Wealth Partners, Bernard Mofokeng, Director in Tax, RM Partners, and Zweli Mabhoza, founder and Director, Priority Tax Solutions. And that's where we leave it for today's special.